Welcome, everybody. My name is Theo Ortiz, and today we're going to talk about how can we protect our retirement income or any qualified plans that you might have. So what is the right way to do it, or how can we protect our retirement income? And there's many ways to do it, but there's also a way that you can actually create income for life. So I'm gonna try to do my best to go fast, but at the same time in detail, so you can really grasp this concept. I do not have to really sell you on we should put money away for retirement. I think that's something that we all already know, that we must save for our golden years. We must save for our future. We must save for our family. We must save for to leave a legacy. I don't think I have to really sell you on that or tell you that. But what I'm going to share with you is how you can, besides creating income for life, how can you protect the money that you have earned through the years? So let's move forward real quick here. It's just an example of someone that is 15 years old and got laid off and has some money already. And the plans that most people know is 401k. So it's just an example so you can see how this one works. But really, if it's a 401k, the question becomes, are we really sure that we're gonna have that money, or we really know how much we will have when we're going to retire, or what we will need for retirement? And most people do not know if they can even have enough, or they will have enough for retirement, and that's dangerous. So let's talk about a little bit about qualified retirement accounts. Let me tell you, everybody, most people, if they have something for retirement, they have what is qualified. And look at this, qualified not to pay taxes now, but qualified to pay taxes later when everything is going to be more expensive. That does not make sense to me. But if everyone has something to retirement, it has qualified plans, 401ks, 403bs, TSA, TSP, 457, you name it. The name changes, the process or how they work is the same thing. Qualified plan is an employer-sponsored plan that meets IRS requirements. And it make it eligible for tax benefits. But is that really a benefit if you think about it? I'd rather get out of my taxes right now and not later when I had to pay more. So let's learn a little bit about qualified plans. I mentioned some, but there's just some others here. You can see in this bucket. So which is tax deferred. We defer in the problem pretty much. We're not getting rid of the problem right now, but we're referring the problem for later. We're deferring the problem for later. They don't have no guarantees. They're actually in the market. They pay taxes later, not now, when people need the most for retirement. They have so many rules, and you probably heard of that 59.5 rule. If you're over 59.5, you still have to pay taxes no matter what. Before 59.5, you had to pay taxes and also a 10% penalty. If they have no living benefits and they have no death benefit. They do not have no death benefit. So there's some other plans that are even better for people up there. It's just that a lot of people don't know how to structure, how to get them to their benefit really. So is the question becomes, is really your retirement account a structure to give you income for life? Are we living longer now? We might need income until we die. right? It's the truth. Is if not, then why not, right? So one option that this client would have, and I'm trying to go fast here so I don't have to take so much of your time, but one option that this client would have, the one that we spoke at the beginning, is he can withdraw the funds, but will face taxes, of course, and penalties. Depends on the age, right? Reducing the total by about 40 to 50%. They can do that if they want to. The other option that he could have is he can roll it over to his new employer if he's still working. But it still remains subject to market risk, because market goes up, market goes down. They can still lose the money. And option number 3, he can roll it over into an annuity, which it has market potential, market protection at the same time. And you can also create income for life through this plan, which is an annuity. So if you see this, what will you think that you would pick? It's obvious that we want to have market potential, market protection at the same time. A rollover IRA is an account that allows you to move funds from an older employer-sponsored plan to another IRA with the same tax classifications. That's pretty much what a rollover is. So let's learn about the tax buckets types. We have here tax defer, which we learned at the beginning a little bit. Now we have taxable plans also. Which are those? Our bank accounts, our stocks, mutual funds, bonds, real estate, and you name it, right? How about tax advantage? Tax advantage is something that a lot of people don't know about. And some actually employers are offering this nowadays to employees, like a Roth 401k. Instead of 401k traditional, they can use a Roth 401k. This means the growth of the money is tax-free. Roth IRA, you probably heard of this one, individual retirement account, but it has to be Roth because there is traditional individual retirement account as well. Or the power of life insurance. Life insurance might not be suitable for everybody, but there's a way that if you are suitable for life insurance, this is actually something so powerful because there's no risk and you grow your money with tax favor. What does this mean? It will grow the same as the 401k, but because we use 7702A IRS code instead of 401k, now you have the advantage of tax-free. And there's something to think about also. So tax deferred cannot go to these accounts that are on tax deferred cannot go to taxable or tax advantage plans. So just bear in mind of that. Now let's talk about this tax deferred bucket here. Most financial professionals commonly advise rolling over 401k into an IRA. But look at this, 401k to an IRA, that doesn't really make sense. They just move the money, but it's in the same bucket. So what's the advantage? Not much. And they're still on the market. It's the same thing. You can roll it over to the same thing, which why do it? It doesn't make sense. But what about rolling a qualified retirement account over into an annuity option, which has market potential, market protection? Some annuities now I'm talking about index annuities. There's many different ones. I think we're going to talk about these ones right now. But they even have living benefits, like a long-term care alternative. If something happens, something critical happens, and things like that. This is not an insurance. It's basically an insurance product, but it's not an insurance. It's not a life insurance, just so you know. So what is really an annuity? An annuity is an insurance contract that protects you from market downturns and longevity risk. You make a lump sum or series of payments and receive regular income starting either immediately or later. You can do an immediate annuity, but now you know that your money is protected, you're not gonna lose, or you can leave it there to grow over time, having market potential, market protection at the same time. And we can add also income for life if that's what you would like to do. So different annuity options. We have the fixed annuity. It's like having money in the bank. It doesn't really grow, but most people have their money in the bank. Why? Because most people want the money liquid, or most people do not know that other programs exist. Now, but with annuity is we have fixed annuities. We have variable annuities, which I do not do those. I do not help clients with risky products. I don't want to put clients or communities on at risk. And then index annuity, which is the one that I really use because it's so powerful, because it has the good of both worlds, right? It has the good of fixed because it's protected, and it has the potential to make money when the market performs. So market potential, market protection at the same time. That's what is index annuity. And really, we don't want to lose our money. So why have the money at risk? We want to make our money grow, but without the risk. So there is a way to do it. And I know this presentation is a little bit really to a client, and I know that you guys are not clients, but I just wanted to use this to give you a perspective of how to protect your retirement. What ways are there to protect your retirement? Instead of, I have a lot of clients that they tell me, oh, my account went down and the market is doing good. I don't know what's going on, because they don't realize there is 17 hidden fees. There is so many rules that are created, and a lot of people don't know, and they're paying for it. And I just wanted to create this short video to show you different kinds of plans and how you can protect your retirement, and at the same time you can create income for life with living benefits. So thank you for watching, and have a blessed day.